All right, I've back for the episode of Carnivore Trades. Today is Monday, April 15th, 2024. If you've not done so already, please give me a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets today with a pretty much a bona fide gap and crap. So couple of things to talk about. So I talked over the weekend about the possibility of a gap up. Kind of like the buy the invasion stuff, and there's still a good chance that that can work, maybe tomorrow, but a few things to unpack here. So, or perhaps later this week. But I never like this. You guys know, if you've been following me for a while, when you're gapping up after a big sell, it's always, almost always, a sell, basically an opportunity for selling. Obviously, you can see this white trend line here. I was looking to get a fade play in this morning. We never got up to that level there on the ES, unfortunately, but big rollover here in the markets. And, when you're just kind of floating up here and you don't even gap but like if you're going to gap up, you got to gap it above resistance. That way you're trapping every short. Because what happens is as soon as those hedges get unwound, that, the long put holders get blown up the first 10-15 minutes. After that you need to have organic buyers after that. And when there just isn't, it just comes right back down. So definitely a gap and crap here. I thought we would be a little bit firmer early in the week, and I thought maybe there'd be a little bit more weakness in the latter part of the week. And I've been saying certainly the week after, I think we can be on the weaker side, for more vulnerable for a steeper correction. But we're getting the weakness now, and right now there's a big DEX level today at 50.50 that got tagged, and that was essentially the low. I've had this in here for a while. That was the lows from late February, where we had that pullback, and then that really held for the last month, almost 2 months now. Through that, there's another level at, well, I'm just going to say 5K. I'm not even going to draw it in. So there's a gap fill right here at 49.80, and then we have a weekly 20 MA at 49.70. I don't think we're going to go much past 5,000, unless, I don't know, unless something really takes place to unpin us. But I'm starting to get the thought in my head that we're going to close the week at 5K, because that is Friday, it is OPEX, and there's probably billions worth of call premium and put premium at 5K, whole round number. It's just how humans like to do things. So I'm kind of wondering if that's where we close the week. But right now, gap up in a downtrend, not never good. Slicing the 50 moving average, not good as well. We'll see if we can get a gap down and a flush into this gap area into 5K. I think that could be something that sets bulls up for that slingshot bounce play. I still think the next bounce does result in a lower high. Typically, the first leg of the bear is the weakest. You get a good retrace because they're still going to be buy the dippers showing up, and until they get run over, they won't buy the dip again. But then you can get that lower high, and then I think we can have a maybe even 4,800. I don't think that's unreasonable. I think that's about like 7% off the highs. So it's really, a standard market correction is 10%. So 7's not really asking for much. It also basically all it does is check back to the previous all-time high, right? Because we have not checked back to that since we broke out. So I think that's at least a logical target. Overshoot, yeah, at 47 and then 46, but we're not even going to talk about that right now, because we're nowhere near there right now. We're just looking to see where can we bounce. If we slice hard, I don't think we're going to. That 100 MA would be major at this point. It's 100 points away, but so it would require a big sell. I don't know, does Iran, something escalate? You can say whatever you want about these headlines too. I was talking about this in the trading room earlier, but they've been saying that this is not new. Like, they've been posturing this, and yeah, they haven't been as aggressive from a military standpoint as far as actually doing stuff up until now. But these headlines have been like, guys, if you've been paying attention, they've been saying this stuff, and Israel's been retaliating and doing all these things since September and October or whenever it happened. Um, the bottom line is the market needs to go down. It wants to go down. And if they need to make Iran the scapegoat, if they need to make inflation the scapegoat, we've been getting high inflation prints since December, and nobody cares. So, but, positioning and timing matters more than anything. So again, if they want to use that scapegoat, they can. But bottom line is, we'll see what we get. I don't think we're going to go much past 5K on this leg. I could be dead wrong, but good sell here. And we've been ever since here. We got a confirmed sell signal, and so far that's been good. I talked about this last week. You don't want to gap down on that Friday after Thursday, because now you can just put up a little bear base in here, inside bar action, and now we're pushing down. So in any case, we'll see what we get tomorrow. I'm assuming there's a ton of open interest at 5K, so that would be a very strong level. Definitely, at least on an intraday basis. Triple Q's here sliced our support level finally. So this has been holding since February 22nd. We've gone nowhere since February 22nd. Everybody's talking about how strong tech is, and it's like one sector, the semis really, and they have come down. So that broke that support. We've got a chance to, essentially confirm it tomorrow with a secondary close. You do have the gap here at 425, and you also have the 100 MA here on the Qs at 420, 421. So I expect that to be pretty good support as well. If we're coming into that around the same time SPX hitting 5K. We could probably pierce it intraday, but I would expect some type of a tail candle by the end of the day. And then again, I think lower highs there as well, especially if we get like a weekly close below this. These lows here definitely says a lot. And honestly, 408 is not that far away here. So that would be your previous all-time high there on the triple Qs. IWM, excuse me, got down to, it actually sliced the 100 moving average. You have a little bit of a gap here at 194.61. I don't think we quite got there. Yeah, not quite. So that may have a little more downside. You got a few pivots in this area here. But again, Russell 2000 is very weak. You can make a case this is like a little M top there on the daily. The weekly pattern is definitely not as good as it was. We'll see where we close the end of the week here. I don't like how we close below that green. That's definitely a negative for the IWM. But again, it's all about interest rates right now, and this is the most sensitive to that. And you could even see, like, as interest rates were rising today, what was higher? The AI name, well, not higher, but what held up better, the AI names, the NVIDIA, actually had a pretty good, pop here, and then it went to the flat line and then got lower high, but it stayed green longer than a lot of things. So again, some of those, it's like interest rates go up and the AI plays seem to hold up, and that's kind of been the case. Anyway, IGV got slammed. CRM, I believe they were announced that they were looking to acquire someone. There was going to be a support here at 270 and then 265 with that tail candle. Bigger move though, I would love it if it got down to this trend line. It's not going to go down there in a straight line, but that, I would be all over that if we can get down there. So that's why, these corrections are so exciting, because there's a lot of trading opportunities. You can go short. You can trade level to level. You can buy the bounces. And then when the correction's getting over with, you get a really good, quality company on a discount. So that's that's something I would certainly be looking at there for CRM. But look at IGV here. This is a big slice, down 2.75. And again, there's that weekly level. We'll see if we close below it. If we do, I think this is vulnerable down to 74.75. Again, not in a straight line, but it definitely can get down there. So IGV weaker. Dow Transport's here again, gap up. Look at the rally. Big run, took out Friday's high in the morning and then right back down. Closing below the 200 moving average. Now this is important here. I'm going to draw it in. So 15,198.95 on DJT. We closed the week below that. That is a failure, and that would make me very bearish on the transports. But until then, still going to give it the benefit of the doubt and just assume, it's neutral. In fact, it's actually holding up relatively well compared to the rest of the market. All right, interest rates here. Oops. Trying to switch. There we go. Interest rates here. So the 2-year was up fractionally. It was up more earlier. The yield curves did kind of tighten up a little bit. You can say that was geopolitical stuff, right? You know, whatever. You know, yields were higher. 5-year getting up into the 4.75 area. 10-year getting up to 4.66. Maybe you could go a little bit higher, maybe to 4.7. And then the 30-year, been talking about this target since the low in December, 4.75. And we got there today. High of the day 4.751. We did back off of it. Again, we might go up a little bit more. I'm not in the camp that yields are breaking out or gonna break out, but I do think that they will remain elevated and trade in a, you know, with higher floors for the remainder of the year. I could see maybe new nominal highs at some point this year, but I'm not expecting a huge breakout. But yields holding up. I've been in that camp for a while. XHB, so pretty good outside move down here, gap up, and just, you know, engulfing candle, losing the 50 moving average, 100, and then about 97 to 95. You get the 100 MA down there. That would be a really good bounce level for XHB if we got down there in a straight line. So like right here in that area. Let me just take a fib here just to see if there's another. Yeah, so there's your 382 at 95 and change. So yeah, I'd be interested in it if it got down there relatively quickly. So we'll watch that. VNQ, this got sliced. So we talked about this. Failure, right? Goes below that green, never good. And you know, I was looking at this for a short, you know, like if it can bounce, but it just, you know, it gapped up today and it just got crushed. So again, maybe you can get a bounce at this trend line, but I would not buy the first support. After you get a failed pattern, good rule of thumb is to not buy that first support. Usually it's going to crash through that. So be careful, or it's going to give you maybe a dead cat. So I'd be very careful with commercial real estates here. Definitely on the weaker side. XLF gap and crap as well. Gapped above the 50 and then closed below Friday's low. Not good. Next level's down here around 39 and change. There's a little gap there, and then the big level's around 38, 32. So XLF getting hit, KRE getting hit. Although KRE, it's funny how now the market's selling off and KRE is not the weakest sector anymore. With the intraday, I mean, like, they actually rallied up pretty nicely by the end of the day, almost closed green. Only down 18 cents. The problem is I do not like this weekly look. So I don't like KRE. KBE is still all right. Again, same thing as the transports and VNQ. You close below this, that's a failure. So weekly pattern. Some to watch. Broker dealers, big bounce intraday. And then came back down and closed below the 50 MA for the first time since, November. So if we keep going down, 560 will be big support here on the daily. Oil was all over the place, actually closing basically flat. We tested the 20 MA and closed back inside of the green. So it's still holding this bullish inside bar above the moving averages. I think there's still another pop in oil, and maybe that's what gets yields up to, maybe 4.8 on the 30-year. Certainly could see that happening. So yeah, crude is still hanging in there. 90 to 92 is pretty much max though. That's pretty much all I've got penciled in for it. But it's hanging in there. XLE came in a little bit more, so this is weaker than crude. Short term, you got it supported like 93.50, 93.60, and then 92. But that did come in today. And again, they've had nice runs. XOP coming in, testing the 20. The 20 is minor. You do have these little pivots right here, and then below that, right around 150, there's some support there. OIH also coming in, so pretty steep sell there. Your first big level is around 320, and then after that, about 310. So keeping an eye on those levels for bounces potentially. CCJ, good sell here. So we had made a new high Friday, reversed, and then we kind of followed through to the downside today. So again, big picture though, it can still put in higher lows. It can still just consolidate the move. So CCJ, nothing terrible here. URNM a little bit weaker, but again, nothing terrible on that. Nat gas down a little bit today as well. Um, I've been using this one a little bit more. Nat gas always gets interesting with those contract gaps. Um, so kind of watching this kind of adjusted price here. And there's a trend line that I'm keeping an eye on here on the daily. We'll see if that gets down there. Otherwise, I mean, you could make a case it's still just consolidating here and building a base, but really nothing to write home about for nat gas, at least at the moment. Dollar index here above 106. So we closed above this pivot now. We'll see if it can confirm that tomorrow. There's a lot of resistance up here, guys. Just so you know, there's a ton. That's massive. So it's going to need to consolidate. It's going to need to do some backing and filling. I'm not saying it can't inch higher, but the likelihood of it getting much farther than 107 is very low. I'd give it like 5% chance. You know, unless, you know, like there's a fundamental black swan thing that happens. There's just so much resistance up there, but I'm not bearish dollar. I just think that upside here in the short run is a little limited. But strong price action. Gold, good rebound after the sell. I'm still thinking that Friday was a bit of a mini blow off. I mean, just look at that move. And then the sell. Very heavy volume as well. So I think that gold, there's a local high in place. Silver, good rebound as well. But again, look at the volume there. That's not peanut mom and pop in their basement traders. Like, that's big money. So I think we'll probably need to consolidate here at the least. We also saw SIL and GDX both red today with gold and silver up. So that's talking to you right there. Platinum down 1.7, but nothing terrible. Like, it came off the lows nicely. Again, if this just consolidates or pulls back a little bit, it can go higher. So I think platinum and palladium are a little bit of an exception here, especially since they're so much closer to the lows than the highs. I think this is the catch-up trade. But right now they both backed off. I mean, everything was down today, so it's not like it was out of the ordinary. Everything was down except copper. Well, I guess and gold and silver, but copper, like, really strong. Never got a sell signal on it with the other metals on Friday. This does not want to go down. I mean, look at the gap up. We filled the gap, and then we went higher. Now, that's very unusual price action. Copper's really strong right now. We got next level here, 445 and then 450. Copper holding up really nicely. And then Bitcoin here. Bitcoin finally showing a little bit of weakness. So we broke that wedge, down move. We could be setting up a little bear base here. Maybe for a move back down to 57, 59, maybe even 56. Big picture though, again, if we go to the weekly, you know, this can just consolidate and go sideways here. Even like it could even go down, like it could come down here and just build a base on the monthly. Like if you want to go really out to a bigger time frame, you could just build a monthly base inside of this area. So there's nothing terrible. I'm not long or short right now, but it does look a little bit weaker here with that wedge break. You can say, notice how we tried to break out, we never followed through, and then we broke back below. So I would give the bears here the benefit of the doubt in the near term on Bitcoin. You know, probably down to about 57, 56 to 59. So Bitcoin a little bit weaker. Again, so to wrap it up here, I mean, there is support here at 50-50, but we tested it and didn't really close off the lows much. If we gap up tomorrow, sorry, bulls. You don't want to do that unless you're going to V-shape hard, and you need to like gap above resistance and then trap shorts. Because if that happens, I think we're just going to go right back down. In order to see a low, I would like, preferably tomorrow, I would like to see a gap down, a good 20 points or so. And then a flush to 5K in the first, 30, 40 minutes. That would start getting me like pretty interested in playing the long side for a bigger bounce, not just like a 10-point scalp or anything. But we'll see if and when we get down there. And what happens tomorrow. Not a lot of economic data. We do have earnings, though. I believe. And I've got it here. Wait, Bank of America tomorrow. And then ASML Wednesday, Netflix, and then TSM on Thursday. So we do have some earnings, not a lot of economic data. There's going to be Fed speakers. And also just be aware, look for mean reversion this week. I'm kind of expecting that. It is OPEX week. Just because they flashed a really nice looking sell doesn't mean they can't just, this can't just be a 5,000 pin, right? They could flush us out, bounce us up, and then just closes at 5K by the end of the week. So keep that in the back of your mind. Don't get too in love with directional trading here this week. Unless we get like too stretched, then I would probably look for a more extended bounce setup. But in any case, just be careful out there. There's OPEX week. There's gonna be lots of liquidity traps, and institutional traps laid out. So, anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll see you guys all tomorrow.